Okay, so now in the examination you will be getting a typical question like this. Okay, let's try to understand the question before we see how to solve it. Now, as you can see, there are three partners involved in this business, which is Digvijay, who gets two portions, Brijesh gets two portions, and Parakram gets one portion. That 2 is to 2 is to 1. So the total shares are 5. 2 plus 2 plus 1, which is 5. Okay, Digvijay gets 2 out of 5, Brijesh gets 2 out of 5, and Parakram gets 1 out of 5. That's the profit sharing ratio. Now we are supposed to prepare revaluation account, partners capital account, and balance sheet. Okay, let's understand what's a revaluation account. It's an activity to either reduce or increase the value of an asset or a liability. Okay, it is basically to write off the expenses. If there are any expenses which we want to write it off, we'll put that in the debit side of the revaluation account. Why is it done? Because either a partner is joining, or partner is retiring, or a partner has died, or the company is closing down. In order to distribute the profits and losses amongst the partners. Okay, so basically, this is one chapter: admission of a partner, retirement of a partner, death of a partner, and dissolution of a company. So these are the four chapters which you have. Okay, so at that time we need to prepare a revaluation account in order to understand how much profit or loss is there, which will be shared among the old partners on the old profit sharing ratio, based on the old profit sharing ratio. Okay, now let's see how it works. Okay, now first of all, what I would suggest you is go into the adjustments and go line by line. So the first line says goodwill of the firm was valued at 70,000 and was not to appear in the books. Okay, so goodwill is a not a revaluation item, it's a partners capital account item, so we've just skipped that. Right, so then we have to go to the next entry. The next entry is the bad debts. Okay, um, okay. Yeah, the next entry is bad debts. Bad debts is 2000 rupees, which needs to be written off. Okay, so we will write it on the debit side of the balance sheet. And then patents is 9000 rupees, so bad debts we write 2000 rupees on the debit side, patents we write 9000 rupees. Okay, because patents is we are writing it off, just now I told you. So the total loss made by the company is 11000 rupees. Okay, so that has to be shared among the partners based on their old profit sharing ratio. So since it's a loss, it is appearing on the credit side of the revaluation account. So 2 out of 5 of 11,000, that's 4,400. Both the partners, since they share the same profit sharing ratio, both of them have to share the equal loss, that's 4,400. And the third partner, he gets 1 out of 5, so therefore it is half of it, that's 2,200. These amounts will be shown in the partners capital account. Okay, this is how typically you will write in your examination. So you'll write the revaluation account. On top, on the left hand side, you're supposed to write DR, which is debit, above the particulars, and on the right side above the amount you write CR, extreme left and extreme right, you write. And then you write particulars amount, particulars amount. So on the debit side, you write bad debts 2000, patents 9000, and the total is 11,000, which you write it in the total column. On the right side, there's no increase in the assets. So therefore, there is no income or there is no profit, so that column is empty. So the entire amount what we have written off, the bad debts we've written off, the patents also we have written off, which are like a loss for the company. So everything put together is 11,000. In order to balance the other side, you account 11,000 rupees as the loss, so which, as I told you, will be distributed among the partners based on the old profit sharing ratio. Okay, now let's understand what's a partners capital account. It is an activity to minus, just a second, yeah, all losses that have been written off. Now, just now we saw bad debts have been written off, that has to be reduced from the partners share of capital, and any goodwill which has to be given. So the old partners will be paying the goodwill to the leaving partner. In this case, because it's a retirement, so the old partner, the partners who are continuing, we can say continuing partner and retiring partner. So the continuing partner will pay to the retiring partner. Okay, so their accounts will get debited. Okay, we gonna minus it, and any profits such as reserve, uh, general reserve, or revaluation profit, all those things will be added to them. Okay, so in a partner's capital, you write the old capitals, then you write the general reserve. Any gains if you've made, you'll add them back, and goodwill will be written to the leaving partner, because he will be getting a share as a goodwill, because he has served the company for so long. So it will be added into his. Why this has, when this is done, obviously this also is done when a partner is admitted, retired, has died, or the company has closed down. Why do we need to do this? In order to arrive at the new capital. Okay, just a second. In order to arrive at the new capital, and we would also like to know how much is the uh, amount which the company owes to the leaving partner. Okay, so okay, now let's see how we'll do. So basically, we take these three partners capitals given in the balance sheet, last year's balance sheet. Take the amount 82, 60, and 75,500, 82,000, 60,000. So we go and write it on the credit side, and the reserves amount 18,500. So now we have to divide the goodwill. The total goodwill is 70,000 is what it has been written off. So now who's leaving? Brijesh is retiring. So Brijesh will get 28,000 rupees out of that 70,000. And now this 28,000 is shared. Okay, so now we've come so far. So let's do the remaining part. Let's me 1 second. That's the- Okay. So the new partner sharing ratio for Digvijay is 2 by 3 and Parikram is 1 by 3. So this 28,000 which needs to be given to Brijesh will be shared between Digvijay and Parakram. So that is 2 by 3 into 28,000 is 16,667 and 1 by 3 into 28,000 is 9,333. This amount will be debited in the account and this 28,000 will be credited to Brijesh. Now let's just see when we do the sum. So okay, so now you can see 82,000 is the uh, capital from the last year's balance sheet for Digvijay. 82,000, 60,000 for 60,000 for Digvijay, sorry, 60,000 for Brijesh and 75,500 for Parakram. It's written Prakash, but it's supposed to be Parakram. The general reserve, as per the balance sheet, was we have divided among the partners. 7,400 for Digvijay, 7,400 for Brijesh, and 3,700 for Parakram. The goodwill, as I told you, Brijesh is leaving the partner business, so he gets that 28,000, which is being distributed, which I showed you the calculation a minute back. By Digvijay, 18,667. Out of this 28,000, he needs to pay, and 9,333 Parakram will pay out of this 28,000. So bad debts from revaluation, if you remember, there was 800, 800, and 400. And the patents also, it's actually 3,600, and Parakram needs to pay for the thing. Yeah, all three will be paying towards it. So okay, so okay, before this, right, as you can see, 3,600 patents Digvijay will pay from it, Brijesh will pay, and 1,800. After doing this, we'll come to a point where we'll understand. Just a minute. Okay, so the total is 89,400, 95,400, and 72,200. So Now the balancing figure will be the amount new partner's capital account of each partner. So have you guys also joined me on Google Meet? So I don't see that you have joined me that. So if you have any questions, you can ask me on Google Meet. So I encourage you to use Google Meet to join parallelly. Am I audible? So somebody can tell me if you're able to hear me. Just text message it to me, please. Okay. Now, so far, have you guys are able to follow what all I did? So we'll be doing quickly a couple of other sums also. So your understanding about the topic becomes very strong. Okay. So okay. Now let's go into the balance sheet. For some reason, it's giving some issue. Later on, I'll share it with you. Okay. Now from the balance sheet, uh, 49,000 was the creditors amount. Okay. So 49,000 is the creditors amount. Once again, let me try to get the sum parallelly so you can see the sum. Okay. See, creditors amount is 49,000, as you can see. Now, these partners reserves we've already taken care of in the partners capital account. So this amount will not reflect in the balance sheet. The Digvijay's capital, we will not take the capital amounts from here because we will take the new capital amounts from the partners capital account. On the other side, you can see the asset side. Cash is 8,000, debtors is 19,000, and stock is 42,000, buildings is 2 lakh 7,000, and patents, because it's told that we are not going to take patents, so we're not going to have this. And then bad debts is to be written off by 2,000, so stock value will reduce to 40,000. So let's see how it works here. See, 49,000 Bridges is new. How much we need to owe? We owe Bridges 91,000. We need to pay back. That's why we've written it as Bridges loan account. And for the other two remaining partners who have their capital intact, so we write that Digvijay is 6,333 and Parakaram is 67,667. So now on the other side, as I showed you, cash was 8,000, so it will reflect now. So yeah, so as you can see, cash is 8,000, debtors is 19,000, stock, because we wrote bad debts 2,000 rupees we've written off, so that value we have to reduce. 42,000 minus 2,000, which is 40,000. Then the buildings value was 2 lakh 7,000, if I correctly remember. So it's taking a bit too long. It's getting streamed, guys, so please bear with us. Okay, so it has not shown the outcome. It'll come 2 lakh 74,000. Uh, it's a bit strange. Okay, so we've come to the end of the sum. So I will share this notes to you guys, uh, and then you can pick it up from there also. All right. So let's go into doing a couple of other sums. So I think Radha Sheila, yeah, this one. So let's go here. Close this part. Okay. All right. So okay. So that's an issue. I will have to keep this fully open. Okay. So I think we'll stop over here and then we can take it from here. Okay. So let's stop this stream.